Welcome to the Sykes Bottom Line Pharmacy Podcast, your regular dose of pharmacy CPA advice to fuel your bottom line, featuring pharmacists, key vendors, and other innovators.
Your checks, yes.
Welcome, everybody, to another episode of the Sykes Bottom Line Pharmacy Podcast. In today's episode, we've got the legendary Jared Barton with Inventory IQ. Jared, you have been around pharmacy a lot. You've been into tons of pharmacies all over the country, working on inventory, helping them with managing that all-important asset in their pharmacy. So can't wait to hear all about it. Welcome to the podcast. Glad you're here. Welcome.
Yeah, I appreciate you guys having me, man. I enjoy the talks we get to do, even though they're few and far between. Everybody's busy, right? And there's a lot of work out there to do, so we got to stay at it.
Oh, yeah, that's for sure. I know we're keeping some of you guys busy over there with some planning before the end of the year. And speaking of which, you know, we always want our pharmacies to get those inventory counts done before the end of the year, because if you get it done on 12/31, you get the adjustments in January, you might get hit with some surprises, and the tax planning maybe you did is out the door because you can't do much after the end of the year. So we like to get those inventory counts done before the end of the year. But Jared, kind of give the listener who may not know about Inventory IQ kind of what you guys do.
Sure. And there's still a few days open for the end of 2022. If you need to get that tax planning or that count done, at me on Facebook, call me, text me, send up a smoke signal. But we try to be a one-stop shop for everything pharmacy inventory related. This business was born out of an independent pharmacy my partners still own. Their dad started it in 1985. It's in Bessemer, Alabama. It's about 10 miles from our office here. And really out of a need to provide greater transparency within our own pharmacy and to help us, to give us a management tool where we could track our largest expense and our largest asset. From there, it morphed into doing some perpetual inventory installations and some consulting centered around perpetual inventory for other independent pharmacies. And then we had kind of an add-on service at that time for some of our stores that had gift shops associated or large over-the-counter presence and things like that. And they wanted to not have us coming in and handling their prescription side and someone else handling their over-the-counter side. So we transitioned into that as well. And most recently, we've spun off a sister company that focuses on the procurement side of inventory, trying to maximize getting the best prices for things you have to buy outside of your prime vendor agreement, whether that's an out of stock or something that your primary may just be outline on. So we're really trying to take it from start to finish through the whole process, make sure that you're buying great, you're managing great internally, you're dispersing to the patient in an efficient way, and trying to help as many pharmacies as we can.
From start to finish.
We're trying. We're trying.
So, Jared, are you doing traveling yourself these days?
I go out occasionally here and there. I get some requests. Some of our customers that have been with us 6 or 7 years and remember I spent a lot of time on the road for the first 4.5 or 5 years I was here. And so some of our customers there go, well, I don't know if I'm going to do it unless you come up here. And I'm like, guys, come on, I can't go to every single one, but I think it's a testament to we've built a lot of great relationships. We've had the opportunity to help some people out of sticky situations. We've also had the opportunity to help some people go from above average to stellar performance. And I think that builds lasting relationships, and I think ultimately that's a good sign.
What is the most common? You mentioned stellar performance there, Jared. What is kind of the most common thing you see in pharmacies holding back a pharmacy in terms of inventory or not managing it properly?
We see a lot of, especially as we transition to an even more electronic age, we see a lot of hesitance, I guess would be the correct term, to utilize the technology that we all pay for every day. And so you've got a lot of money and a lot of time, a lot of effort tied up in learning a pharmacy management system and not leveraging the abilities of that system to their fullest potential. we see quite a bit. And for us, it could be a small sample size, but for us, it's when we help somebody transition to perpetual inventory, but maybe there's still some old habits there as far as manual ordering, and that's typically in the best interest of the patient. Right, that's how that kind of comes through in workflow. Is people want to make sure that they're special ordering this item, so I know it came in. Instead of trusting the system and making sure that our workflow is tight and everything's working the way that it should, and that typically creates some balloon in inventory. We see that holds some people back from really maximizing those inventory turns.
Mm-hmm. I have a question. So, if I understood correctly, you said is the hesitancy to leverage items that they've already paid for. So just to clarify on that, a lot of the tools that people can use are things that they already have in-house, but they're just not willing to utilize something that the tools that they already have in place. Is that what you're saying?
Yes, absolutely. And that's just from that pharmacy management system, that software suite that they've, I think, a Pioneer, an RX30, a Computer RX, a Liberty. Those systems are incredibly robust. It takes a little bit of a deep dive, and sometimes it takes a little trial and error to get it work, because independent pharmacies by nature, or by definition, I guess, are independent. Everybody has their own way of doing things. And so we just see people not want to either dig down in the weeds or worried about making a mistake. And sometimes that is on the staff pharmacist or the technician level as well. That you have a poor interaction, so to speak, with a particular patient, and instead of trusting our system to order this item when we run the prescription, I'm going to make sure that we get that item for this patient, because I don't want to have that interaction again. We see that create, when you spread that out across 5 to 10 to 15 team members, that starts to really create an inventory balloon that could have otherwise been avoided.
Oh, wow.
Bottlenecks, extra time, and it goes on from there. Absolutely. Extra money, because that extra inventory sitting on the shelf is $100 bills. That's not in your bank account.
Exactly. And that's the measurable metric that we can see. Is as that inventory starts to creep and we start to dig into it and we see multiple one-item orders or something like that on the wholesaler platform. I know the system didn't create these because we're not running that many orders a day. So what happened here? A lot of times it's kind of very obvious what's going on.
And I like the wording you use. You said that's the measurable item. I know even for our line of business, the measurable item a lot of times is a tax savings. But then when they become a part of Sykes Company, a lot of times the things that people stay for are not measurable, like the comfort of knowing your tax liability early on, or different things, or knowing my accounting is done in a professional way. Those are not measurable, but that's the reason why people stay. For your line of business, I can imagine that it would be hard to dive into a system that you're not familiar with. And do you feel like that's something that people enjoy from Inventory IQ, is having that support and getting those things going, or beyond just the measurable items, which is reducing their inventory? Sure.
And we really see it be about half and half, right? The comfortability of having somebody you can call, having someone you can lean on to ask questions to, whether it's about the pharmacy management system itself, or, hey, I'm thinking about doing this thing with my workflow, or just an off the shelf inventory question. We see about 50% of our customers, that's actually what they gravitate to. And I would have lost money on that wager. I'm a numbers guy, I'm an analytics guy. And so my thought always was the return on investment that we provide to a store that's not quite where they want to be. Maybe they're holding too much inventory but don't really know how to transition. I would have thought that was the main value driver to our customers. And we did a survey in 2021 of those as we rolled out a new consulting service, and it was really about half and half, and I was shocked. But it's also changed the way that we approach some of those people as well, which I think is good. You know, if we know that somebody, maybe they're later in their career and they're not as tied to, they're not servicing any debt on the business, they've been established for quite some time, and they're not as tied to, I want to run this thing at 27 turns a year and maximize every cent, but they're more at that point where they want to do community outreach. They just want to know that we're keeping an eye on things for them. I'm willing to give them that latitude where 3 or 4 years ago, I would have really been leaning on them. We got to lean this thing up. We got to lean this thing up. And now I recognize that there's something different for everybody that interacts with us.
So what services do you have, Jared? You've got the actual where you guys go in and count the inventory, but you mentioned a consulting service. Kind of dive into those service levels.
We have 2 versions of that count. And so the one that we do in conjunction with some of your customers a lot of time is an audit count or an estimated inventory count. And those are designed to give credence to, if somebody has a perpetual inventory in place, let's make sure that that's staying accurate so that you all have good numbers to report on and to help with tax planning on. We have another version of that when maybe those perpetual accounts have drifted from accuracy in a large way, that is a unit by unit, where we come in, count everything down to the tablet, capsule, gram, milliliter, and then put that back into the system so that we can get them back on track. And then we provide a turnkey solution for perpetual inventory management, where we come into a store that's never done perpetual, may not be familiar, or may have had a bad experience in the past. We'll count everything in their store with that unit by unit count, put it into their pharmacy management system, analyze their usage, set reorder points for them, train the staff on how to utilize all of that, and then provide return suggestions for items that they're no longer using or not serving them any longer as an asset, because if we hold inventory to the point where there's no use for it anymore, it's now a liability.
Mm-hmm.
And then we provide that consulting service as was kind of a step 2 to our perpetual, because we recognized that for our boots on the ground approach with perpetual, that carries with it a lot of cost. It's a service. So putting people in store for a week in a land far away sometimes, or maybe close, that carries with it a certain cost. But that consulting service, we were able to provide some people that were maybe at that 14, 15 turn mark. We were able to provide them a lot of analytics and a lot of return on a much smaller investment on a monthly basis, and it smoothed their inventory over time.
And with that service, you're going into the system remotely and helping them manage. And
that's correct. It's been an incredible management tool for our multi-store owners, and it's been a great efficiency tool for owners that have a single store, but maybe they still have to work the bench and they don't get to look at every single little management report every day, or they don't have a management team with them to bring them those reports. We're able to put that in front of them and give them a snapshot of the business on a monthly basis about how they're managing their inventory.
And, you know, we harp here on at Sykes Company the importance of a perpetual inventory system. You got to have it. And what percentage out there are using perpetual in your opinion, and how important is it for a pharmacy to get on that perpetual system?
I think it's the number one thing you can do to ensure success in your business. When we look at it on just a numbers basis, I talked about being a numbers guy. On average, 78% of our annual spend in an independent pharmacy is on inventory. It's cost of goods sold. And I ask people this at conferences, if there's one thing you could do to manage better 78% of the money you'll spend this year in your pharmacy, would you do it? And unanimously, everybody raises their hands.
Yeah,
like, it's not true. And it's tongue in cheek. I know that to be true, and I know people are at all different stages of their journey. Some are brand new owners and they just haven't gotten there yet. Some are 3 or 4 years from retirement and they view that to be something that their successor will do. Maybe it's not. It hasn't been something that they've had to do to be successful, and I completely recognize that. But I do think that there's a reason that CVS, Walgreens, Walmart, they have entire departments dedicated to that, entire teams. They figured out how to make money on a low margin business a long time ago. And I think that hasn't transitioned in a large way to the independent market. You asked about percentages. I think it's still under 50% in my estimation. Now, I talk to a lot of those people, so that's not scientific. That's not a case study.
Yeah.
But I know several years ago when I got into the pharmacy business, the numbers were in the 20s. That's published by NCPA, and I don't feel like we've converted that many in that time frame.
Yeah, I mean, we have a similar feeling on our end when we're working with pharmacies as well. New pharmacies coming in the door.
And when we see, for me personally, when I see the pharmacy owners that have Perpetual compared to those who do not, at the end of the month, when it comes time to look at the numbers, and not just the inventory number, but everything, I sense a lot more confidence in those who have a Perpetual system that's run correctly. Meaning, they look at the number and it's more of like, okay, this is how I performed. They know. The ones who don't, who are guesstimating at the end of the month, they say, well, this is how I performed, but inventory could have been a little high or inventory could have been a little low. So maybe we'll just keep watching it for a few months and see if these numbers pan out. So I can imagine that it instills a certain level of confidence in a pharmacy owner. Scotty, I don't know if you could speak to it, but if you don't have the right number at the end of the month, how does that impact what we see when it's time to look at the numbers as far as financial?
It's got a huge impact because, if your inventory is off $50,000, $100,000, your bottom line is going to be off $50,000 or $100,000, and your margins are going to be off. And when you're talking about KPIs in a pharmacy, well, your margin's your number one KPI. So you need to know that margin, and if it's off, you got a problem. You don't know how your pharmacy's performing relative to your peers or how you should actually be performing from a margin perspective. But in addition to that, your bottom line, you could be paying tax on, $100,000 of income that's not actually there. So inventory is critical, and I like what you said there, Kendall, with our clients that do have those perpetual inventory systems, which most do. They do have confidence. You do see that confidence in how they're running that inventory. They know what's on the shelf. So that does make a difference. I think you're right.
And I got a question. So obviously, I think the average person, Jared, would know how beneficial having it could be, but maybe there's just the hurdle of actually getting it done. Do you feel like, is it a two question? This might be a softball question or might be a fastball. I don't know. But do you feel like it would, like, paint me a picture of the time commitment that's involved with someone trying to get this set up, start to really management? Paint me a picture of what it will be if somebody has no experience and they're just trying to do it themselves compared to like what kind of an inventory IQ type service. How do you help with that time commitment or, energy that will be involved in getting this going and running?
Sure. And that's the number one thing that we see when people either do a do-it-yourself type thing, or as compared with having us come in. Time in the process is margin for error a lot of times. And the reason that is that a lot of people don't have an extra 2 or 3 staff members to allocate to this project. So it's done either on weekends when we're a little bit slower, the script volume's down, maybe it's done in the middle of the month. Some people will go whole hog and try to get the whole team in over a weekend and do that, and that typically works out better. And it's just because there's so many moving pieces to the inventory. In an average store, a couple hundred scripts a day, 250, something like that, you're looking at 1,500 unique NDCs. And if you're dispensing and receiving product through that time, you have to track those movements in and out. And anything can happen there. And so we actually will see people, and we do a handful of services a year, where somebody calls us and says, I'm tired of trying to wrangle this thing in. Please come in and do this. And I'm like, okay, we'd love to. And the feedback that we receive from them is, I've done this a couple of times, and we started, and by the time we got to the end, it was awry, and we had to start over. And it's this revolving door because of time in the process. And a lot of people, it takes them a couple of months. Maybe they say we're going to count a shelf a week or something like that, and it takes them a couple of months to get that on, as compared with, if we come in, and there's obviously a cost associated with us coming in. I know I have a vested interest in telling people how great we are, but it's done in 2 to 5 days based on the size of the store. And that's complete with, if you do it yourself and you have no experience with perpetual inventory on that particular system, what do you do when you finish? We like to begin with the end in mind. What are you going to do when you get everything counted? How do you set those reorder points and things like that? So somebody that's never done it, they can do it for the first time. We got a lot of smart people in this industry. Everybody that's a PharmD out there went to 15 years of college and everything is what it felt like to me. And I didn't go to pharmacy school. I was ready to be out. But we got a lot of smart people out there. If you can learn pharmacology, you can do inventory. But you got to know how to do it.
Is that why? Well, maybe that's why there's so many pharmacies out there that maybe are not on Perpetual, with maybe the learning curve to get it going, and then the time invested to keep it up, and it's a lot of work. So, what are some of your expert tips on best practices for maintaining and keeping this system going in a pharmacy?
Expectations, tempered expectations. We find a lot of people out there that they want this to be an achievable goal. They want there to be a finish line. And the thing about management, it's very persistent, unfortunately, is that you may have the greatest team in the world, but at some point you're going to have to manage them. You may have the best workflow process in the world, but at some point it needs your input. And we see that come to inventory management as well. For whatever reason, counts can stray. It may be because we were buying some things outside, they didn't get added, some returns didn't get removed from the system, something like that. But I like to keep it simple. I was educated in the Alabama public school system, so I have to by necessity. But I find that it also transitions better when we're talking to people. At the heart of a perpetual inventory system, you have two things. You have reorder points, which is at what point does your system trigger this item to order? And those reorder points are referencing on-hand counts.
Those reorder points, that's a tricky area because it's constantly changing.
Can be. Sure. Something that we'll talk about around that to polish that thought. You've got those two things, and the more accurate you can keep those two, the better off you're going to be. Moving to order points, there's a million different ways to set those. So, and I think that if you're trying to get started yourself, or if you were to ask me how we do them, we touched on every independent pharmacy being different. I think that it boils back to the patient. What is your patient base using? And then take into account what your terms from your wholesaler are. I see a lot of people that want to keep a month's worth of inventory. You don't have to do that. If everything gets here tomorrow and we know we fill this prescription once a month, let's put that person on a sync program. And I think that's the number one tool we see people diminish their inventory with, is synchronization or proactive purchasing. However you know about that.
Yeah. Yes, certainly. Syncing definitely plays a big role in that, for sure. We see that all the time.
I got Scotty, tell me where you want to go with this. We got a hot topic to discuss. Hot topic for 2023.
Well, we covered we covered Perpetual, actual counts, some best practices in there. What about Jared, what are you guys doing? What are you guys kind of anticipating with the DR fee changes that are coming down the road in 2024? And how does that how are you planning that into inventory? And is inventory being your largest expense in the pharmacy, a lot of money tied up in that inventory? How does that play into kind of what you guys are anticipating with the DR fee changes?
Sure. I think that not enough people are talking about it, and I stay in some echo chambers where people talk about it all the time. But that change is going to be huge for pharmacies, especially for the first 6 months of 2024. All those contracts, and for everybody that's not familiar with that, DR fees are going away from retro starting in January of 2024. And so what that means is that at point of sale, they're going to collect everything that they will collect for that particular claim. So all of these clawbacks that we get over time as those insurance companies settle those claims will no longer get those. And, I'm a little bit of a cynic, and I think that would incentivize a company to take maybe a little bit more at the point of sale, but we won't get into that. There's nothing to suggest that. That's just my feeling to make sure that they're covered. But what that's going to create is a massive.
It's a valid feeling.
I just feel like companies that are responsible to shareholders and they've enjoyed a certain percentage, a certain margin, like we talked about, it would not be in the management's best interest and the shareholders' best interest for them to undergo a business practice that's going to potentially turn any of that margin loose. That's going to leave that to question. But like I said, I have no scientific evidence for that. That's my disclaimer. That's just a feeling. But I do think it's going to create a massive cash drain or a cash pull for independent pharmacies the first 6 months of 2024, because some of those contracts are settled quarterly, some of them are settled on a trimester basis, some of them are settled semi-annually, things like that. And so for that time, you're not only going to be paying the full percentage of DIR at point of sale for the claims that you're running today, you're also going to be catching up things that you ran in the latter half of 2023. And so really the message there is cash flow is king. So we need to free up every available dollar. We need to make sure that we're running as lean as we possibly can, and we need to proactively purchase items that may be of high cost to us that help us keep more money in the bank so that we can weather a storm.
Yeah, we're going to have some content out on this DR fee change in the coming months, for sure. And so, Jared, what would you say is the number one thing pharmacies could do in terms of inventory for planning for this? Would it be getting on that sync program? How would you tell a pharmacy to prepare for this from an inventory perspective?
Sure. I would put a couple of steps in that process. Number one, I would make sure I was on perpetual inventory, because that gives me a transparent view into what the needle that I'm trying to move, right? Kind of like you guys touched on with tax planning. If we have that count done on December 31, that's great. But at that point, the year's done. The amount that we can move the needle on that lies with what my CPA is comfortable with, right? And that's not a good place to be in. We want to be able to affect our own outcome. So first of all, I want people to be on perpetual inventory. Once we got on perpetual inventory, I would start to monitor my inventory turns over kind of a monthly average, and I'd want to boost those up as much as I could. There's a couple of ways to do that. You can schedule purchases for people that may or may not want to be synced, but I love synchronization. I think it's a measurable metric. I think it's something we can point to, we can bonus our staff on. But when you think about that, the step-by-step process of synchronization is not customer facing. So even if somebody doesn't want to be synced, if they want to pick up this at this time of the month or this at this time of the month, you can still purchase their medications as though they were synchronized. You don't have to make them come into the pharmacy just one time, but you can at least use the information you have to purchase their drugs more proactively. So when I say that, I'm not telling everybody to go out there and, grab your customers and tell them you only get to come in once a month. I'm just saying, let's utilize the benefit of it to ourselves, of being able to predict those purchases and to proactively approach those purchases. And let's serve our customers the way served.
From your perspective, what is an ideal sync percentage in a pharmacy? 60%?
It never gets too high.
Never gets too high.
You're never going to sync 100%, right?
Right.
Long-term care might. If I was owning and operating a long-term care pharmacy and we got to the end of the day and there were any bottles on the shelf that were not open and partial, I think I would have something to say about it. But for lack of a better term, you've got somewhat of a captive audience there, and that's not a joke. That's just the only terminology I have for it.
Yep.
You know what you're going to fill, and you get notified by the home of if there's any new patients, any new needs for you to fill something. And so from there, you can operate those stores a lot more tightly with respect to inventory management. For a retail pharmacy, we've got to keep antibiotics, you've got to keep an EpiPen in there. You got to keep a glucagon kit. We don't, anything that may be an emergent situation or something where the cost to miss that sale is not great. It doesn't outweigh the benefit of expiring that item. I would suggest you keep. But the way I like to start with synchronization is let's focus on patients at a certain dollar figure for their medications. And then over time, as we get a little better, let's start to walk it down. And that's the way we see people bolster that synchronization program, because some people get to 20%, 30%, and they go, well, where do I go now? We just need a process that we can walk down, and that stuff's ever changing.
Mm-hmm. That's great. Prioritizing it seems like it's not just only the percentage, but what does that percentage make up? What population that percentage makes up?
Absolutely, because when you think about it, it takes the same amount of time whether you're synchronizing somebody that's on Humira or somebody that's on haloperidol. I want to sync the one that gets me the most bang for my buck in terms of time. I want to, if it takes 5 minutes for somebody to make the appropriate phone calls, if it takes 10 minutes, I'd rather make a $10,000 phone call than a $10 phone call.
For sure,
as it pertains to my management. So,
how about robotics? Jared, how does robotics fit into all this?
I like them at scale, and I've talked to people on both sides of the process. I know guys that do 700-800 scripts a day and wouldn't buy a robot, or wouldn't let you put one in their store if you gave it to them. And I know folks that are 200 a day that absolutely love, their Safe or their Parata Max or their Script Pro 200. I think at scale, it makes sense. We see there's kind of a stair step in pharmacy payrolls where if you have one pharmacist on staff and a technician or two, you can turn out a certain number of prescriptions responsibly. You have to take a leap of faith if you're on the right growth trajectory to hire that next one, because your payroll kicks up and it may not be commensurate with your sales increase. And so I think if you get into some scenarios where you're kind of in between, but you've got a really high performing pharmacist or you've got some good hours, you've got a good workflow process, I think you can supplement with robotics and maybe utilize those at some creative times of day so that it's not bottlenecking your process or monopolizing one of your technicians' time, and really make the dream work that way.
Yeah, I think robotics can be very valuable in a pharmacy, especially with labor costs the way they are, and with pharmacies actually going beyond just filling scripts nowadays and getting into other revenue opportunities, other clinical type services. It requires more time and effort from that perspective as well. Absolutely. That automation and robotics could supplement.
There's two schools of thought on that. The guys that are in favor of them say, well, that robot never calls in sick, never takes a day off and everything. And the folks that are not in favor of them would tell you, yeah, but it doesn't answer the phone and it doesn't create any relationships. So when used properly, I think they're great.
Yep.
And I don't have a dog in that fight because mine doesn't break down on me in Monday morning at 10:30 and cause me any headache.
Yeah, they do have those maintenance issues, but that's it's just the way that is.
That's every machine out there. I don't want anybody to think that I'm down on robotics, because I love them when I think the plan is in place.
Yeah, good point. Jared, you just got you're not on the road as much these days, right?
No, not as much.
You just got married, so I imagine those days of being on the road all the time are few and far between nowadays.
I can tell you there is far more discussion when I come home and say, I'm going to Greenville, Mississippi. And she's like, it's not duck season. And I'm like, no, it isn't. It is June. But she, we've been together a long time. We didn't meet until we were a little bit older. She was in grad school, and I was still working. I was still working in and around the Auburn area after I graduated, and so it wasn't we weren't used to being right up under each other. We're both very independent. I got the best wife on the face of the planet, but we did a long distance relationship for a while because she had a job in Pensacola and I moved to Birmingham to start with inventory IQ. And so that created somewhat of an independence and also a fondness and an expectation that we wouldn't be together 24/7. But I tell you that as we've combined households and she's gotten used to it, it's not as easy to pick up a duffel bag and go to Pikeville, Kentucky, or somewhere of that nature.
Well, congratulations on that. That's awesome.
Yeah,
thank you. I appreciate it.
That's wonderful.
Thanks, Cadell. What about you guys? What's new with you? I mean, it's the end of the year.
Well, we've been just knocking out tax planning, man, and just kind of gearing up for the year end, and that's always a busy time. These are some of the most vital calls we have this time of year with our clients, and so just hanging in there.
I was going to ask that. Do you feel like you get more out of the process, or I guess not really you, but do you feel like that the customer of the pharmacy gets more out of the process in Q4 than they get in Q1?
Q1 is compliance. So when we're in Q1, we're looking at Q1 that year. We're not worried about the prior year. I mean,
right.
Prior years right now with tax planning.
Sure.
So that's why we say, these are some of the most important calls we do from an advisory standpoint and tax planning standpoint and things like that. So
I'm trying to figure out how we can collectively yell from the rooftops in Q3 that we need to have all inventories, maintenances, audit counts, everything for planning done by like October. Because if not, you can't move the needle. We've talked about this a lot, and I still have customers that have been with us forever, and I've told them this over and over and over. They love that end of the year thing. There would be people fighting one another like it was Black Friday in Walmart. Everybody's seen the videos. We're like knocking the doors off people over the last week of the year. I'm like, guys, that's great, but you've got no latitude. There's nothing that you can do to affect the outcome. So,
yeah, and I can say this, especially, I think here we've been screaming that from the top of the rooftop for our clients.
And you guys do a great job with that.
Yeah, I think most of our clients knows, like, they get on call and they're like, oh, I need to make sure my numbers are tight for around September and October, right? They know that's when they need to know that their numbers are real tight so that they can have an idea of where they stand. We've been screaming it.
And we also scream that perpetual inventory because you need to have that in there. It's vital. Again, that inventory is your largest expense. You need to be keeping tabs on it. You need to know exactly what's going on. You need to be sinking what you can and keep it as lean as possible. Get that cash in the bank. So,
just thinking about it from a management perspective, if inventory is 78%, what do you guys see on payroll? 10 to 12?
10 would be
10.
Ideal. Yeah.
Okay, 10 would be ideal. And I would say less than 78 would be ideal too. And some guys, there will be some multi-store owners listen to this and go, oh man, I'm way below that. And well, you're buying on volume. So you should get a little bit better deal. But we'll just take that average of 78 and throw 10 for payroll on it. You can't move the needle anywhere else. It would be difficult, to move the needle with marketing, releases, advertising, that type of stuff. You almost can't get lean enough on that to make up for inefficiencies in the other two.
When we're talking pharmacies, most pharmacies do not have any problems with expenses. And they don't move the needle, like you said. If you're trying to move the needle in a pharmacy, it's either inventory, cost of goods, or payroll.
Sure,
100%. And that's why that margin percentage is so important, because that's that inventory, that's that cost of goods. It's crucial. So,
what's the outcome on that? I know you were talking about overpaying, but we do a handful of inventory counts every year where maybe somebody hasn't had their inventory counted in 10, 15 years, something, and don't know. And we see it go both directions. Sometimes it's, we got about 200 in here, and they've got 400. And sometimes it's, we got about 400 in here and they've got 200. Obviously, in one scenario, you're overpaying. In one scenario, you're underpaying. How do you reconcile that once you get that data?
Well, there's a couple ways you could do it, I guess, but that's where it gets a little tricky, because if it goes into prior years, how do you want to handle that from a tax perspective? Amend the tax return or flow it all through the current year? So that's kind of a case by case basis on how to handle that. I mean, we've seen inventories come, or pharmacies come through the door. They had this one pharmacy had 1.2 million on the books for tax purposes for inventory, and they had actually 200. So it's overstated by $1 million.
Mm-hmm.
And this client chose to flush it through the current year, and he was under audit from a prior year when he came to us, and it passed the audit, but they didn't question the adjustment that was made. They just, inventory was wrong and they adjusted the actual. So, but again, in that scenario, that pharmacy, paid tax on $1 million, essentially, that wasn't there. So
I did a follow-up. The reason I asked this question, I did a follow-up last year in Texas, and we were in a very similar situation. They had 2.5 or 3 on the books, I believe, and when we finished, I want to say it was 1.6 or something. And this isn't an estimated audit count. This isn't an estimated audit count. This is a to the unit. I counted everything in here. There is no doubt. And so they this is a rather large organization, and they have in-house accounting staff, and so we want to talk about in-house accounting staff running around getting ready to melt down. And the good thing was they had a third party prior that came in and did it prior to us, and that's where they got that number. So it wasn't anything nefarious or anything like that. It was just that they received a bad number, and it's tough to deal with sometimes.
It is.
Yeah, you definitely don't want to. You definitely don't want to be on the side where you're like, I've overpaid over the past course of so many years on $1 million of tax. Or you don't want to be on the side when you're like, over the past so many years, I've underpaid. And now, am I going to pick up all of that in the current year, or am I going to be just looking over my shoulder for an audit? So it's just a much better thing, just to get it right, just nail it down.
Right. And that was kind of the source of it. For them, it was short lived. They did an annual inventory. They got a bad inventory figure. Fast forward to present day, they have a good inventory figure, so that's fine. But some folks we run into hadn't had it counted in 15, 20 years. And I'm like, man, at what point do we think it got off? When did it stray from accuracy? How would you unwind to that? Because, my undergrad, I'm not a CPA, but my undergrad was in accounting. And so I think about some of the aspects of that as it pertains to you guys sometimes. I'm like, ooh, I'm glad I don't have to do that.
Yeah. I mean, usually I'd say most times you're going to flush it through the current year, but yeah, I mean, you may need to amend some tax returns in that case. It just depends.
So I was just going to say, usually I forget to ask, if someone wants to get in touch with you, what's the best means, like website, email?
Sure. Yeah, you can find us at inventoryiq.net. Our phone number is 1-800-253-2013. And if you go out there too, we're fairly active in the Facebook groups. Sometimes you'll see me interacting as myself. Sometimes you'll see us interacting as Inventory IQ based on what group it is, what page it is. So yeah, we would love to talk to anybody involved. If you don't know where you stand, we do a free inventory analysis to try to catch you up on what we might do together, where we think you might be able to go, or if you're peachy keen, and we'll release you back into the wild. So
the best in the business, Jared Barton and Inventory IQ. That is for sure. Appreciate all you do for our clients, Jared.
yeah, man,
I know
thank
you work
you.
with a lot of them, and keep up the good work. So when we wrap up here, we always like to do the bottom line. So Jared, let's let you kick it off. What would be your bottom line takeaway from today's conversation and our listeners out there today?
Sure. Bottom line is just let's begin with the end in mind, and that means whether we're undertaking a project or we're going into a new year, be that a tax year or just goals for our business in the coming year. We touched on something that's going to take effect in Q1 of 2024. So as we near the end of 22 here, we'll start to think about what you can do in 2023 to be prepared. I always say I have a very vested interest in the existence of the independent pharmacy, just because that's the only vein of business that we serve here. This is a group of people that's near and dear to our heart. So I want to see everybody have a prosperous 2023 and 2024. If there's anything that we can do to help, we'd be honored to help you.
Awesome. Yeah, I'd say my bottom line here is 2023 would be a good time to really, if you haven't already, get that inventory tied down, devote some time to it, put systems and processes in place to do everything you can to manage and keep that lean and be prepared for, again, maximizing your cash and the DR fee changes that are coming.
Yeah.
And
yeah, my takeaway is if you haven't had inventory count in 15 years, if
I like where this is going.
and if you don't know anybody who's on Perpetual, let alone have it in your store yourself, I think there's a lot of analytical reasons. There's a lot of cash flow reasons. And then there's a lot of emotional reasons regarding stability of your business to at least take a step in the right direction. You might not go full-fledged, but just take a step. Just get started on that journey. And it might be a journey that's fast or slow, but just take a step. This is a journey you want to start.
Sure. I like to encourage our team to run in whatever direction they think is best. The logical next question is, what if I'm going the wrong way? And I'm like, well, if you run, you find out quicker.
Isn't that the truth?
So,
I like it a lot.
Isn't that the truth? Well, Jared, appreciate you coming on with us today, and we'll certainly have to do this again next year sometime.
Absolutely.
And best of luck to you guys out there.
Thank you.
And all the listeners out there, appreciate you listening in. If you have questions, comments, feel free to let us know, and we'll be happy to help you any way we can. Thank you all.
Request from the best. We the best. Sykes Company. We the best. Sykes Company.